Good evening, everybody. All right. Jim, you all set to go? All right. Hope everybody's having a nice, it's already October. Where did the summer go? You're running on generator up there. What's going on? Are you? Yep, October is here. October. All right. I understand they got 3 foot of snow in North Dakota the last few nights. Okay, I guess we have to come back to where we can observe the obvious. The obvious is that this trend channel still remains in effect. There's our tops. There's pretty much our bottoms, all running parallel with each other. So it looks like the Dow still has some more downside. So, let's see, get rid of the pointer. None. All right. So that means even though we're in the oversold area, there's still the target. There's 2 targets here. 1, this channel, and 2, if they bring it down to the 200-day moving average, kind of fitting in with this one or this support level. Okay. Now, hasn't been real concerning at this point due to the fact that when the NASDAQ or the Dow was going down, the NASDAQ was going up. However, notice what we had today. Make this big enough. We had the NASDAQ gap down pretty much at the Friday's open, tried to trade up, but closed down, did kind of a shooting star, doji type day, which makes this a very simple analysis. It's going to move in the direction of how they open this market tomorrow. So if they open positive, that tells us this support level, a little support level here is still holding, and that we're still not in any big sell-off. On the other hand, if they open this lower tomorrow, going to move it in the direction of how they open it. If they take this down, we essentially have a little flutter kicker to the downside, number 1. Number 2 is telling us that support level, which has been pretty active for the last 2 months, a month and a half, is now gone. So where's the next target? Potentially down to the 50-day moving average, which essentially means we're probably going to have 2, 3, 4 days of sell-off. Today, the S&P did the same type of setup, depending on which charts you're looking at. But notice what's happened the whole way down here. They can't get it to close and confirm above the T-line. Today they came up, just touched it, and sold off. Makes this very simple. If they open this lower tomorrow, they aren't holding in here at the 50 anymore. Yeah, so going to be ready to buy a lot of, if you don't like going short, you can buy some of the short funds. This is SDS, that's I think the 2 times. And, it's a TZA, TZA, small cap, 3X. Notice how this is starting to curl back up like a fry pan bottom. So anyways, that's what we have to look forward to. Now let's take a quick run through the commodities. Crude oil prices are still fading. They can't get out of this downtrending channel. Gold prices still in this downtrending channel, not too anxious to break out, but it looked like silver had a more active day where you had kind of your doji sandwich where the positive trading after the doji took you up above the T-line through the 50 and through the 20. So you're sitting right here on this downtrending resistance level, which makes this very simple. If they open silver higher tomorrow, that means they're breaking out of this downtrending channel and probably taking you back up to the 200-day moving average, which would be testing the recent high. Thank you, Ed. SPXS. We'll make these more pronounced. So the opposite of what the markets did today, there's that gap up doji. If it opens positive, which means the market is open lower, you're going to have that doji sandwich, the flutter kicker. And if they have a flutter kicker, that's going to be some good force on the upside for this, which means there's good force to the markets on the downside. FAZ, well, what's happening here? FAC, the same scenario. Gapped up above the 50. If they open this positive, breaking out of this little J-hook type pattern, it means there's more downside in the markets, more upside in some of these short funds. Let's see. Didn't get through all the commodities. I'm still long. I'm flipped over to being long in the lean hogs, moved from the October contracts into the December contracts. Still have this up move, kind of this consolidation, waiting for it to break out through this level. I'll continue to hold it until I see a sell signal. I don't think the other commodities have anything of any great importance. Now, we're starting to see the soybeans, after this little buying signal, start coming back up through the T-line. It looks like they're opening positive. So if they start trading positive, that means this downtrending channel is broken. We could be in for the next wave with kind of that little scoop type handle. I don't know what the other ones did. Let me take a gander. Wheat's been in a nice steady uptrend ever since it came out of this fry pan bottom breakout. Nice 45 degree. And corn, notice a little kind of little minor cradle pattern down here. If they can break out through this downtrending channel, should be double bottom, starting a new uptrend. Let's see, natural gas. Natural gas has had a little bounce. There's that spinning top gap up. That makes the, again, the 200 the likely target. Let's see, dollar index, still going lower. And note, it can't get up above the T-line. We had a left-right combo with needing confirmation. Now, why is there more confirmation needed when you're right close to the T-line? Because that's your resistance level. That's where the trends will hang. The further they move away from the T-line, the more likely you're going to have a few days upside come up to test the T-line. But in this case, it needed to open positive and trade positive today. They showed us right away that the T-line was still acting as support. Let's see, the Japanese yen, that's still in a slow uptrend. Let's see, what have I forgotten? Oh, interest rates. Bond prices keep moving up. Means interest rates keep dropping a little bit. I know there's one that I've forgotten and I can't think of it. So, anyways, let's move on to some good-looking stock charts. There's a lot of fry pan bottoms which we're going to take a look at. Here's CLNT. This one's starting to get a little bit of activity again to the upside. We did cattle, right? Oh, no, we didn't do cattle. Feeder cattle is rolling over. And Doji, and they're looking like they're opening lower this evening. So, but they haven't closed yet below the T-line, but that would be watching to see if they've rolled these over. And live cattle also having a hard time. It's climbing, but it's right now kind of a little indecisive. I probably wouldn't be going after long on the live cattle right now because you're in the overbought area. You've had a good move, and it looks like it's trying to get a little bit toppy. And I guess that was it. All right, so back to stocks. AVHI. This is what you want to see on a pullback. Number one, notice how indecisive the pullback is. And number two, they couldn't close it back below this level. Then they've gapped up and closed above this level. That pretty much tells us they're going higher. That's what you call a methods rising. And this is the important part where they had the doji and then the gap up and a close above this level. The fact that they closed above this level when the bears couldn't close it back below this level told you there's still more upside to this. And let's see if we can see what the chart looks like. Chart looks like we've had a gap up from a doji, methods rising, right smack dab at the level it should be breaking out. This one you want to be buying. What stock are you looking at? AVHI. I don't know whether you can see the symbols up here. NS will keep stock picks, and usually what we'll do is that when I get close or when I get done, I will say, all right, Jim, do the double line. That's when you put in your individual signals. Yeah, they're very small. Well, I can't help it. That's the size they are. So that's why I try to repeat them. Oh, only average is 63,000 shares. All right, that might be a little problem then. Okay, some more. XONE. That's told you there's a different story. If you indecisive trading down here, now you've had a bullish confirmation breaking through the T line. This one, I would suspect there'll be a quick pop up to 60, which is a good percentage move as well as a good option trade if you're looking for timing on options. ABIO. What did I do? ABIO. Another fry pan bottom. And notice what's happening over here. Now, this is only a $1.70 stock. But over here, when they broke out, then you had a lot of whipsaw action. Now, whipsaw action just tells you there's a lot of interest coming into the stock again after this big fry pan bottom. So don't let the whipsaw deter you. Just as long as they stay above the T line, this means you're still in a breakout phase. At this point, with a doji, stochastic still heading up. Hold on, I got to get a good hard cough here. Okay, now I feel better. This one you can be buying on positive trading with the anticipation that the next target is going to be up here to the 200 or possibly filling this gap just above the 200. No, okay, that's right. There aren't any options. INO is another good-looking chart. There's your doji, bullish confirmation through the T-line and bullish confirmation today. Wouldn't be afraid to be buying this one on positive trading tomorrow. Now, here's a couple that will probably get recommended for tomorrow. MITK, look where it's coming from. This little scoop-type pattern. Let's make this bigger so we can all appreciate the value of this chart. Doji, 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 bullish left-right combo, close above the T-line. Today it confirmed. Got a scoop pattern. They're not going to go back down to through the 200. They've closed above the 50. You definitely want to be buying this one on positive trading tomorrow. This one's going to have a whipsaw, or not a whipsaw, a slingshot action. Excuse me again, coming out of this formation. The next one, CSUN, one of the solars, it broke out of this fry pan bottom. So this is the reason why knowing what your chart patterns become very valuable. If you miss this move, which was a heck of a move. Went from, broke out at the 350 level, went up to almost 7, almost doubled in 2 days. Now it's pulled back, and we can see what type of pattern it's setting up. A J-hook pattern. And where did it do a bullish engulfing signal? Smack dab on the T-line. This one you can be buying, because if it just popped this much, remember, the reason that these pop is because there's huge demand, obviously. Then there's profit taking. And when the profit taking's over, what comes back into the mode? The huge demand. So, again, here's kind of an illustration of a fry pan bottom breakout. Now we're in the J-hook pattern. The probabilities are very strong that this one's going to go up higher and it could head up into the, what would be 6, 7, or 4 points, up into the $10 area. All right, and one of the indexes are S.UXVY. Humbug. Did I write it wrong down? Yeah, maybe. Maybe it's UVXY. Ha. All right, this is the short fund, one of the VIX short-term fund, and again, observe the obvious. Fry pan bottom came right to the 50 and failed. Fry pan bottom did a little trend kicker today, which indicates there's going to be more upside, and kind of got pushed right up through that little T-line crunch, pushed it up through the 50. There's a good possibility this could run up toward the 200-day moving average. There's a few gaps in here that need to be filled. All right, and let's see if I got this one right. TVIX. All right, this is the, again, a VIX short term. I think this is a 2X. Still a good upside potential, which basically means the VIX could be picking up some steam here, which means they're probably selling it off. Now, things like FU, again, this is where you kind of want to train your eye. You had the breakout. You had the gap up through this level. Got in with a very strong price move. Kept moving up. Opened positive this day and moved up further. Now, this is where you just kind of flip over to your 10-minute chart. I don't know whether I can do this well on this one with that being that far back, but let me try. 10-minute chart. I'm guessing was what it looks like. This one right here. 10-minute chart. Acting strong that day. And then all of a sudden, 3 dojis and a close back below the T-line. Now, would this be something you definitely want to sell? Not necessarily. But the fact that you could analyze that you're a huge distance away from the T-line, that's when you start saying, all right, where is the profit taking going to start coming in? That's where you flip to your 10-minute chart. Say, all right, if my 10-minute chart starts going bad or going south, closing below the T-line, let me take my profits up here because I know I'm that huge distance away from the T-line. Let me come out because if you got in somewhere down here and took your profits up here and made whatever that turns out to be, almost 300%, play the 10-minute chart, because that means at some point they're going to start taking profits. Now, back to the daily chart. Notice what happened right here. Stochastics back in the oversold area. Bullish Harami, which means if you were short, you definitely want to be closing out the trade if it opens positive tomorrow, because where's the first likely target? Bounce it up here to the T-line. Will they continue to take it up? We won't know that, but more than likely they'll take it up to the T-line. Okay, let's see. That was FU. Let's see. We had APRI. Now, a lot of these charts that I come up with right now, especially the ones that are below $5, are people in the chat rooms finding them and assessing exactly what are looking for good charts, and they're finding them. This one's very simple. Came up, failed at the 50, came back down, and did a kicker type signal or a gap up from a doji signal from the over or where the stochastics turtle back up. This one you can be buying with the obvious resistance being right here, but you might be in a 45 degree from here, because anytime you see that strong price move, there's probably going to be some more buying, because just very simply stated, when the Japanese rice traders saw a huge change of investor sentiment, it's usually going to follow through. The bigger the signal, the higher the probability things are going to keep moving in that direction. Like this chart, this is PKT. Nice move up, right back to the 200. Remember, came up, they used the 200 as resistance. Pulled back, went through. Now they've just pulled back to see if the 200 is going to act as support, which they confirmed that they did. Wouldn't be afraid to be buying this one. Anticipating if it moved 6 points here, you got another 6 point move, taking you up into about the $21, $22 area. FANG earlier in the day looked good. How did it close up? Still closed up nicely. This one's a very strong chart because they take it up, they consolidate it. Notice the little minor scoop pattern in here. Slingshot effect, J-hook pattern, J-hook pattern. Anytime they do a J-hook pattern, that pretty much tells you they were taking profits. And what that does is tells you the uptrend is going to remain pretty strong versus seeing it move exceedingly strong and then seeing some profit taking. So this one, if you got out here, you can get back in, because more than likely they're going to keep this in a nice uptrend for a while. That was FANG. We also saw, and again, these charts kind of illustrate why you don't need to have relative strength on your charts, because the individual chart will tell you whether there's relative strength. Today the market was down big. Zales, after selling off, did a hammer back up above the T-line. You're still in this 45 degree, and you just stay long as it doesn't close back below the T-line. LX or LTXC. Another nice little J-hook setup. J-hook, J-hook. This one's probably got some strong upside to it. Might be up another point or two from this level. Let's see, what ones have I forgotten? Oh, some of the ones that were still long, but VIPs, same scenario. Fry pan bottom, J-hook. Move up, little J-hook. Continue to hold this one. And MLNX backed off today. But there's that scoop pattern. Broke through the 50, came back up. Huge down day in the market. And it's still sitting right smack dab as a doji. If this opens positive, you could pretty well estimate where your next target's going to be. That's up here at the 200-day moving average. Now, there's some that have backed off that need confirmation. For example, CLDX had a good-looking chart, has a doji potential, because notice kind of your fry pan bottom breakout. Pulled back, hit the 20, smack dab on the 20, came back up. Now, if this opens positive, you want to be buying this because you've probably got a J-hook pattern. You can be buying it, but with the caution that it needs to get through the T-line pretty quick. All right, let me see what else we got here. I didn't get to the patterns. All right. I thought I was getting all done. SLR, there's that fry pan bottom, there's a doji. If this opens positive tomorrow, you can still be buying. That means they're still coming up. Look for a breakout here pretty soon. TLM, fry pan bottom, and notice what happened up here at the breakout area. lots of whipsaw, but the reaction or the net reaction is that they're going to be taking it higher. That's why I always say when you start coming out of these patterns, use the T-line as your stop. That'll be a very good indicator of whether it's failed or whether they've just pulled back on a given day and for profit taking and then starting back up again. Beat has a nice little fry pan bottom setup. There's your Morningstar signal starting in your uptrend. If they open this positive after today's profit taking, it tells you the profit taking's over, and they're going to continue to break out into new territory. AMCC, and again, these fry pan bottom setups usually give you extra strength in that there's something going on that created the fry pan bottom in spite of what the market direction is. So there's still some buying going on here, kind of a doji sandwich. Now, a doji sandwich is a big up day, a big down day, then a big up day. Tells you they've wiped out that profit taking and they're probably taking it higher. This one you can be buying. I would probably be buying it if it came back up through these this level right here. That would tell me they're now in a new trading area. Scotty, nice little hook in here. I'd be buying this one on positive trading. Now, if this opens lower tomorrow, you buy it when it comes back up through the previous day's close, because if it trades higher, what do you have? You got those three white soldiers. And three white soldiers are an up day, the next day they open it lower, then have an up day, the next day they open it lower, have another up day. That pretty much tells you as they were moving it up, the sellers were taking profits, but the bulls kept in there. That tells you there's going to be more upside also. Let's see, GDP. Nice little fry pan bottom breakout. Notice your doji sandwich setting up. If this opens positive tomorrow, you want to be buying immediately, because what's the result of a doji sandwich? Usually day 1 and day 3 are equivalent. Except when day 3 isn't equivalent to day 1 and everything's still heading in the right direction, there's a high probability that day 4, you can combine day 3 and day 4 together to equal the same as day 1. Yes, the little independent oil and gas stocks are looking good. So if this moves the same magnitude in the next day to equal these 2 days equaling this day, what's that tell us about our pattern? Tells us our J-hook pattern is pretty well broken out. It's going back up to the top of the trend channel, if I could draw a straight line, up here somewhere. And WLT, another one that's been discussed in the chat room quite a bit. Nice fry pan bottom. There's your, if it opens lower, get ready to buy it trading higher. If it opens higher, you want to buy it immediately. Observe the obvious. They can't keep this right now back below the T-line. Stick sandwiches. All right, we did stick sandwiches at AMCC. That was a big up day, big down day, big up day. Somebody was asking today why all of a sudden are we seeing things like stick sandwiches when we haven't seen them before? Because they haven't been in the market before. This is why, as we go along, we're doing kind of a rolling education. We're analyzing what patterns are coming up for us. Now, stick sandwich is not a major signal, nor is advanced methods rising. But there's something you want to keep an eye on and understand what's happening there just so you can use that information. If this one opens tomorrow and trades back up, coming out of a fry pan bottom, doing a stick sandwich, that tells you there's more upside coming out of the stick sandwich, which means they're breaking out through the fry pan bottom, gives you a good probability you're going to be in the right trade at the right time. So, again, this will be a function of how the market's open tomorrow. There's kind of a little slow curve. Again, if it opens and starts trading positive, where is it going to go to? It's going to come back up to the same trajectory as what the trend was before, and then probably continue to 45 degrees. Let's see. BIDA, I think, was an example of a fry pan bottom breakout. Yeah, kind of came out of this. No, this is more kind of a wedge formation. Why do I have this in here? Anyways, all you can do here is stay long until you see a sell signal. And another stick sandwich. Oh, there's for the stick. What did I just do? Stick sandwiches. Oh, a doji sandwich is DWRE. DWRE setting up for a doji sandwich. Came out of a fry pan bottom. Has closed above the recent high over here. And now if it opens positive tomorrow, you want to buy it because that's still confirming that you're in the J-hook pattern breakout. That cuckoo clock is a little bit out of kilter. Okay, and the slow curve, you always want to keep an eye on these. And I hate going back, and in this case, I wouldn't have caught it because it was below $5. But notice this little fry pan bottom, notice the little slow curve, followed by a gap up, and make it bigger yet, just to show that if you identify things are curling back up, then they gap it up. This is the type you want to be buying because not only are they gapping up, breaking out through the resistance level, I mean, something's happening after this little slow build-up. That's where you're going to grab your strong breakout situations. So something like ONVO, not so much, but kind of a big choppy bottoming action with a doji gap up. You want to be buying this on positive trading because if they break out through here, you're going to have a lot more upside. All right, so those are the longs. Now, if we go back and identify the market, there may be still a couple more days to the downside, either the Dow starting to hit this support level, this little trend channel, and or it's going to the 200. And we see the NASDAQ open lower at the same time, telling us we've got a bearish flutter kicker, meaning they're going to take the markets down some more. We want to start looking for things that have big potential moves to the downside, such as AHS. Notice what we had here. The opposite of a fry pan bottom is your dumpling top, and then they gapped it down today after came back up, failed the T-line, and bam, they just pulled the bottom out of this. So that's the type of thing we're looking for. You're probably going to see a recommendation to short OSTK tomorrow because notice it's doing a rounding top, failing at the 50, closed below the T-line, and let's make this big enough to see what type of pattern it was doing today. Essentially, they opened it at the previous day's low, even though they had a tail to it and took it up, it failed at the 50 again. Closing down here, you've got a kicker signal, failing at the T-line. That tells me this is a blue ice failure. We're heading down into this area, which would be a good 7 points on a $29 stock. Is that about 30%? Somewhere in that range, 28%. Also, ANF, rounding top, failed at the T-line, and now they've gapped it down. And where did they gap it down? Below the last support level over here. So that pretty much tells me if this could be wave 1, wave 3 could be hellaciously lower than this one. What is the target on NGB, NBG? I would think right now the first target is up here at the 200-day moving average. Let's see, let's make this a little bit smaller. There's a little gap right here that it could be filling. And then if it gets up to the 200, we're back up to where they gapped it down. And then if they break out through there, you don't have too much resistance up here. So anyways, this is telling you a story. For 1, 2, 3 months, this has just been as flat as a pancake. And all of a sudden, they're starting to buy this aggressively. This is one that could have some big upside to it, meaning back up into this level. Okay, LGDT. Well, Shazam. Who wrote this? It's LGDT. Okay, let's try that. All right, I know I've done something wrong here. Is it LGND? Not legend. No, that's got a nice little scoop pattern. I can't figure it out. All right, so we'll go on to the next one. BODY. LQ. Aha! Thank you, Ed. All right, here's body. BODY. Failed up here. They're taking this down. So we've already had some good downward movement. This one can still be shorted. LQDT. LQDT. All right, so that one has gapped down. Kicker signal closed below this resistance level. Remember, anytime you see a kicker signal to the downside, you disregard stochastics. That means they're trying to get out of this in a great hurry. I wouldn't be afraid to be shorting this one with the possibility that could have another downdraft on that magnitude. Okay, BONT. Now, one of the stocks that I've probably made tons of money with is BONT because it just follows the chart patterns very nicely. And right now, as we can see, this little rounding top has told us they aren't coming back up through the T-line, that this is still in a downtrend. You can be shorting this one because notice where this one closed, below this last support level, and they failed here at the T-line. There's still a lot more downside. FDML, rounding top, kicker type signal today. They could take this all the way down again, back to the support area. That would be a good hefty percentage to the downside. TRLA. Another situation where they've got a bearish engulfing, so you can pretty much tell that the bears are in control. Anytime you see a sell signal, they try to take it back up, see another sell signal. Now they're starting to gap this one down. This one's got some good downside direction. Yes, if anybody's up in the New York City and New York or New Jersey area, Jim has a group up there that gets together. So a lot of people like to get together and see who else is trading and at least be able to ask each other questions and know what they look like. That's a good way to do it. Here's OWW, another slow curve. Where is this one probably going to? Down here to the 200. That's a good looking chart for the short side. VCLK. Failure to hold this support level. This one, if it moved down like this, wave 2, wave 3 should be a pretty good strong down move. We've been short DXM. We closed some of it today. Whoops, humbug. DXM. But we're still in this rounding top, still heading down. Covered some. And if it comes back down through this level, I'll reshort it because if this is wave 1, wave 2 is only halfway there yet. So there's still a lot of downside potential for this one. CTRP. Left-right combo, evening star signal, doji sandwich, closed below the T-line. Probably a good at least 10 to 15% to the downside potential with this one. BTH. BTH again. Observe the obvious. Where did this fail? This is why I always say, watch what it does once it gets to the 200. If this had done a bullish candle and broken through, told us the 200 wasn't going to act as resistance. Gets right smack dab to the 200 and does a doji, then gaps it down, closes below the T-line. They're taking this one back down where? Possibly all the way back down to the bottom trend channel. Let's see, ALJ. Oops, hang on for a second. So what did happen here? Something rang me. Oh, that was Jim. Okay. ALJ. And this is one thing, too. If you've got your choices, which would you want to be shorting? An uptrending stock that's had a sell signal, or a downtrending stock that's resisting and still selling off? Well, your probabilities are that if you're in a downtrend, you're still going to be in a downtrend until you see a major buy signal. So this one I wouldn't be afraid to be shorting. This is ALJ. I mean, it's come all the way from 18 down to 10. There's a good possibility they could take it down to 6. And one thing I've learned in the investment arena over the years is they can take prices a lot further than you ever think it could possibly go. Here's another one. Look at the slow rollover. Notice what type of signals you're having up here. Spinning top, hanging man, doji, spinning top, little star doji, hanging man, doji sandwich. Where are they going to take this? First target's back here to the 50-day moving average. BCC, a bigger company, Boise Cascade, little rollover, gap down. They could, and which way has this stock been going? Obviously to the downside, and where did it start rolling over? Right about here where they had a downward trend channel. Where could it go to? Draw a line through the bottom of your trend channel. It could come all the way down into this area. So, do these trend channels work? They do, because everybody else can see what the trend channel is. You can draw lines between them. Can we see what the trend channel is? Yeah, they could see where the top is, and then we can see where the bottom is probably going to be. Uh-oh. Ow, ow. Hold on for a second. Technical difficulties. Okay. What's the name of the stock with a slow rollover? Was that BCC? BCC? Nah, need to put on my shirt. Yeah, we did lock just before that. Lock was also rolling over. And URBN, another one that's had a big, broke through this down, or the kind of the wedge formation, gap down, broke through the support level. They still taking this one down further. All right, so the reason we want to take a look at the shorts, obviously, is if this market opens lower tomorrow, especially on the NASDAQ, we're going to be seeing the whole market sell off. Because, as you can see, the NASDAQ has been our support. When the market, NASDAQ was going up when the rest of the market was going down. So if it opens lower, we're not supporting at the T-line anymore. If the S&P opens lower, it's not supporting at the 50 anymore. That means this one could probably come back and test the lower trend channel. So with that in mind, you don't have to sit there and, which was always me, thinking, oh man, I've got a few longs on. Maybe I'll just wait and see what happens here today. But if I can identify that I can pretty well guess or guesstimate what's going to happen on a lower open, I don't have to sit there and wait. I can close out long positions fast and start moving into more short positions. Okay, so with that, are there any questions, general questions about candlesticks that I can answer here real quick? If you get a bullish gap up, kicker type signal in oversold area, how do you play it if it sells off right after the open? If it starts selling off right after the open, what do I want to see? I want to be buying when the buying is there. Which one was? Give me a specific. What is my favorite candle pattern? The slow curve. I've made tons of money hitting the slow curve just before it starts breaking out to the upside, and in 2 days they pop it up 10, 12, 20, 40, 80%. How many candles does it define to make a J hook? Anywhere from 3 to 20. Could you give an example of buying a bullish spread? Okay, let me try one real quick here. Isn't it more difficult for long position to work if the market is selling? Yes, Tammy. Now, the reason I show long positions is that I would guess that probably 80% of investors out there still do not like to short just because they're unfamiliar with it. They don't like the concept, and it's un-American. So with that, there are still, even if this market is heading down, there are still patterns that are heading up. As you can see, the markets have been down for quite a while. We've been in quite a few patterns that have traded positive over that time because this market is very sector specific. The solars had been acting well. Biotechs have been acting well. Is there a difference between a rounding bottom and a scoop? Yes. A scoop has a flat handle, and then there's that little scoop that does the slingshot effect to the upside. Let's see. We had a scoop. Was it MITK? Yeah, it has this kind of like a flat handle, and now you've got the slingshot effect to the upside, which could, and so notice what the effect has been on this for the last couple of days. Market's been soggy. Dow was down 100 and some odd points today, and this one was still up, trading up. Yes, the flat handle too. Are we too late to start shorting? No, definitely not. Especially if the NASDAQ starts selling off. Remember, the biggies were already being sold off here for the last few weeks. The smaller stocks haven't. The NASDAQ stocks have had the stronger sectors. They've been selling off the big ones in the Dow. And why are they selling off the big ones? Because I'm sure the institutions are still worried about what's going to happen in Washington. And if everybody starts getting worried about that and starts selling off the NASDAQ, that means there's tons of stocks out there that have been going down. Oh, Shazam. I thought I had this worked out so nicely. But they're still going to continue to go down. Okay. Let's see, how many candles did it? Can you give me? Oh, bullish spread. Yes. What am I in a bullish spread right now? VIPs. We bought here because on this breakout of a J-hook pattern, we knew we had more upside. All right, so now we have to do, when I'm trading options and I see the option trading course JK, yes, for members it is free. We will do little segments, like we'll do spreads one night. We'll do bearish spreads the next night. We'll do which stock or which patterns create where you just want to buy calls outright. We try to get around the factor that most people, when they see a good stock, they want to buy the calls immediately. That's not the best way to do it. You get a much stronger price or rate of return with less exposure and less break-even area, a lower break-even area on a spread. So, for example, on this one, right here, I bought the 65.70 spreads for October, and I paid $1 for them. And that was buying the 60, and I don't remember the prices. But let's say, for example, I was buying the 60 at $3 and let's say I can't remember what they were. But I'm going to just say, let's say $2.50, and I sold the 70s for $1.50. So I had a dollar spread difference. Now, what does that do for me? Number one, if I'd bought the 65s outright for $2.50, they would have had to gone up, obviously from here, the 60s, they would have had to gone up, or I'm sorry, even the 65s at $2.50, they would have had to gone up to $67.50 just to break even. Whereas with buying the spread for $1, from here, if it went up to $67.50, I would already have made 200 or 150% of my money. My dollar would have gone to $2.50. So what it basically does is it has less money exposed, makes the move a lot less. You make a lot more money based upon the leverage of the move. That you've only got $1 exposed. If it went up 5 points to, let's say, closed at 70 at expiration, my dollar, if I just did the spread, went from $1 to $5. Made that percentage return, about 400%. Had I bought the 65s at $2.50, and again, if the stock was down here, I would have had to gone all the way up to $67.50 just to break even. And then if it went to 70, I would have made $2.50 on my $2.50. I would have made 100% instead of, well, it was 400%. Anyway, so to make a long answer long, the spreads work very effectively because they give you much better leverage, less money exposed to the market, lower break-even level. And if we can pretty much calculate that if this is wave 1, wave 3 should go up to approximately the 70, and that's our upside potential. Why try to hit a home run if we know our upside potential is only there? So, anyways, we'll go through that on our spread night, which will be probably in November, because right now, as you may or may not know, we are packing up 2 houses here in Houston to move up to Pittsburgh, and so that's probably taken most of our time. Okay. Yeah, also the brokers give you a harder time if you want to short, because they have to go through a few more activities to get you the stock so you can short it. Which candlestick pattern is good for day trading, and which chart duration is good to look at for day trading? I look still at the daily, And one of the best chart patterns is your doji sandwich. If it opens positive, you buy immediately because you know the magnitude of the move will be the same as the day before the doji. A fry pan bottom, the difference between a fry pan bottom will usually occur at the bottom of a trend area, whereas the slow curve, which slow curve was I looking at? Let's see, NDG. Oh, that one. A slow curve is usually after a strong uptrend. Then there's a little slow curve and it heads back up again. Let's see, MYGN on October 1st. Was that the right one, or were you thinking MLNX? Was that on October 1st? Yeah, that's where the scoop pattern started on this one. Okay, then what's the difference between a J-hook pattern and a scoop? A J-hook pattern is after a strong uptrend, then you have a pullback, and then you have the J-hook pattern, where again the scoop pattern comes out of a flat, little slow curve, and then slingshots to the upside. Yes. So this is a breakout, strong price move. And so this is why we call this the classic, because the classic is a fry pan bottom. What's a fry pan bottom create? A very strong price move. Well, it's a J-hook. Prerequisite is a very strong price move, a pullback, and then the J-hook starting you back up again. The scoop pattern is where you have a flat handle. They get bored, they sell it off, then somebody else comes in buying, and everybody jumps back in. Creates a good, strong slingshot effect to the upside. Okay, seems many inverted hammers at tops have appeared. Can you explain their significance? No, those aren't inverted hammers. Those are shooting stars. Remember, inverted hammer occurs in the bottom of a trend. A shooting star occurs at the bottom of a trend. That means if they open lower tomorrow, you close out those positions. The shooting star is your top reversal signal. How do you determine when to buy an option versus a spread? Okay, Melinda, that was, again, the math. And we'll do that in one of our sessions. Remember, as a guest member or a trial member or a member, when we try to do, now we've been a little bit lax here this month because of the move, but usually we'll have 3-4 training sessions like entry and exit strategies, the best way to scan for signals, how to set your stop losses effectively with candlesticks, options, different option strategies. We try to have 3 or 4 of those a month, and because October is going to be lax, we'll probably have 6 or 7 during November, and then we'll probably have quite a few during December, because that's usually when we're all sitting around sipping our eggnog and sitting by the screens. Okay, is there a description or explanation of the patterns on the Candlestick website somewhere? Dave, I think out of the 1,300 pages, they're in there somewhere, and if not, they're in the High Profit Candlestick Patterns book. Can you please explain how you scan the stock for day? Disha, that's a whole training session. And very easily, I've got the scans all set up that I'm looking for patterns in the oversold area, and then sort it by the biggest percent price move the next day. How many contracts did you buy of VIP? I think I've got 40 or 50 contracts. It wasn't a whole huge one. But it's working. Almost always better off buying a spread than buying a single call or put. Yes. Can't wait for those classes. Tammy, they will be here. I just need to get up to where I'm settled back at a nice desk in my big office in my new house. And then we will have a lot of training sessions going on. Not so much a slow curve on this one, but the doji gap up is, which one was the slow curve? NPG? No, there was one that, I can't remember what it was. I know in the opposite direction, AHS, there's that slow curve or dumpling top to the downside. OS, KT, again, the slow curve to the downside. Yep. Is J-hook and J-hook has fewer candles than a slow curve? Yes. Spreads have one disadvantage to note. You have to wait closer to expiration to realize the full spread value. That's true too. So that's why you try to calculate whether you want to be buying calls outright or doing the spreads based upon how much time you have between now and expiration date. So you're going to live in Texas full time. Now I'm going to live in Pittsburgh the majority of the time, but we'll still maintain one of the houses here in Texas. Yeah, and also a disadvantage to a spread is, I was trying to think of which one we were just looking at for a spread. Oh, let's say, for example, on the MLNX, I did this, no, it wasn't this one, it was in VIPS. On VIPS, I did it based on that it was going to target 70. But let's say all of a sudden something happened, they get bought out, and the stock goes to 110. Well, if I bought the calls outright, yeah, I would have had a huge profit, whereas my spreads, I only still have made the $5 on each dollar that I put in. So that's your upside risk or upside potential is limited with a spread, but the probabilities that you're not going to see the big, huge moves most of the time, you still make a good amount of percent returns on the spreads. Did you buy the Biltmore resembling house? No, fortunately, it's a nice big house with a full basement that adds a bunch of space to it, and fortunately, the basement goes right out to the swimming pool, and I haven't lost anything. Yeah, the Biltmore Estate, yeah. I'm going to be up in the Cranberry area. So more than likely, the next private training session will probably be in the northern part of Pittsburgh. I know that's not exciting, but it'll be, probably only about 20-minute drive to Carnegie Mellon. Okay, Jim, go ahead, Jim, go ahead and do the double line. There we go. All right, and Jim, in 7.1 seconds, do another double line. Okay, let me see if I can scroll back up here. No, you guys are typing faster than I can scroll back up. Let me see if I can zoom it up here. Okay. BBY, another slow curve to the downside. This one you can be shorting. Now, where's your target? Probably at 50. But if it breaks the 50, where's it going to go? It's going to come down here and fill this gap. So you've got a 6-point move on a $30 stock. Not too bad. RH doesn't look, let me make this bigger so I can see if there is any. RH looks like it's failed here at the T-line. You could probably go short, but here's kind of got a junk area over here. I would probably be more apt to short it once it broke through this bottom area. I definitely would not be long now, because even though we did have a kicker signal, it backed off. So if I own this, I would have been out of it. You can always buy it back if it comes back up above the T-line. Let's see, is this Cameron Ironworks? No, it's Canadian dollar. S.CAM. This one you can get ready to buy. Notice how they use the T-line. Morningstar signal off the 50. Now you're at the 200, but notice at the 200 you're not in the overbought condition yet. So if they go through, that means they're breaking through. They're going to at least fill this gap and potentially go higher. BRKR. This one you want to short on weakness tomorrow. That's if they break the 50 after a evening star signal gap down. They've got a good possibility of taking this all the way back down to the 200-day moving average, which would also correspond with filling the gap right about here. So that's a only about a 2-point move on a $20 stock, about 10%. Whoops, S.WU. Kicker type signal to the downside, another one that you can be shorting if it opens weaker tomorrow. OPK. Doji today. I would use today's low as my stop. If it comes back down through there, they're bringing it back down to test the T-line. DDD. Another one that, again, if you're short-term trading this, you should want to be out of it. Long term, you just want to sit and hold this because it's too hard to trade on an intraday basis. ACAD, Doji gap down, one of the pharmaceuticals that's hard to short because they can run so strong. But if this one opens lower tomorrow, you want to be shorting it. Rite Aid, Doji up here in this area, you're still in the 45 degree. But if it did open lower tomorrow, I'd probably close it out. But then I'd see what it did once it comes back to the T-line to see if I want to buy it back again. So why risk? If everything's trading lower tomorrow, we don't know how long they could take the market down if everybody decides that they're going to pull the plug. They're going to wait for the government to get straightened out, which could be that nobody ever gets back in the market ever again. TSPT. There's your column reversal. Notice how they slammed it down, waffled it back up, and slammed it back up. That's a very strong J-hook type pattern. This one you can be buying on strength. Let's see, ATHX. That's a big reversal. There's your bullish Harami telling you the selling has stopped. They've come back in. Now watch for your 45 degree coming off of that. Disco. This is one. Again, this is one. If they open it higher and start taking it down, go to your 10-minute chart. Take profits. You can always buy it back when you see that the profit taking is over. So if you've got a stock that's up 50%, and they start selling it off, take profits. You can always buy it back. It only takes seconds to buy back a position. Lumber Liquidators. Yeah. S.LL. This one, notice the gap down. They brought it back up, but they failed the T-line. You want to start shorting this, especially if they break through this level, which is also breaking through the 50. They could take this one down pretty hard. GMCR, stay short until you see a buy signal and a close above the T-line. GNC. This one, I don't even really know. Obviously, if you're long, it has to open positive and trade positive. If it opens lower tomorrow, you close out the position because it's coming back below the T-line. And as you can see, it's not gotten any real good force here recently. If I was going to buy this, I just put a buy stop up here. I need to see it come back up through that level. NPSP. Stay long until you see a sell signal and a close below the T-line. Men's Warehouse had a good strong chart today. Well, shuzzbuzz, what's happening here? That's a nice kind of little routing action with a gap up. This one you can be buying on positive trading. Your first target is right up here. Fill in the gap, and see what it does once it gets there. YGE had a good, strong day. Ever since you had the doji sandwich that broke you out of wave 2 going into wave 3. At this point, I'd have my sell stop at today's open. Probably more at Friday's close. If it comes down through there, that tells you there's some profit taking going on. You want to be back out of it. ANV. ANV's got a nice little breakout. Let's make this big enough where we can see it. Kicker type signal. You want to be buying this on positive trading tomorrow. If they break through this level, they've got this gap to fill, and then they could be taking it higher. This would be essentially a double bottom. Now they're taking it back up. Why is a double bottom more compelling than a reversal bottom? Because the bears, for the second time, see the bulls are stepping back in, and they say, get me out of the way. They are definitely buying. This one, you get ready to close it out if it comes back down through the T-line. Notice the tweezer-type tops you're getting up here, all right at the same level. They're starting to sell off. So if this opens lower, I'd probably close it out. At this point, if I owned it for 25 cents, I would rather close it out and then put a buy stop back up here. If it goes that way, then I'm back in and I've missed out on a little potential profit, but greatly reduced my downside risk. Coach failed today. Notice it opened at the lower end of yesterday or Friday's trading and closed back down below the T-line. This is why I think some of these big clothing stores, Abercrombie, also still in a downtrend. Let's see, Yum. Did they report earnings? It looks like it's starting to start this trend channel. You can be buying. Just be aware of what your magnitude of return is on this one. It's not that great. Lulu, look for a double doji sandwich. If it opens positive tomorrow, you buy immediately because that means this little consolidation, which isn't very powerful, is over with. It starts back up again. And Apple, what's happened here? Undefined time interview. Okay. That's great. Apple is having a hard time getting out of this trend channel. You can see the trend channel, and you can see they can't get up through there. So if they open this lower tomorrow, you don't want to be in Apple. You want to be in Apple once they go into a new wave up here. Oh, Yum's earnings after close tomorrow. Thank you. Enoch, get ready to, I don't know what I just did. Get ready to take profits if this opens lower. There's your bullish harami. If it opens lower, there's your bearish harami. If it opens lower, they're coming back to the T-line. Maybe it will stop at the T-line, but why take the risk? Close it out and see what it does coming back to the T-line. FNTN, still moved based upon the result of this kicker signal, J-hook pattern. You stay long until you see a sell signal on this one. And VTUS backed off a little bit today, but we're still in this J-hook trajectory. I'd still use the T-line as your stop. Remember, they gapped it up. They've consolidated. Now they're back up again. Just let it run its course here. QQQs, same as the NASDAQ. If it opens lower tomorrow, or you see the Qs are trading lower tomorrow, get ready to start taking some profits on the longs. I say GWPH. That's a very nice chart. When you see this little coming up through the resistance level and they break out, you want to buy. You always get big moves like this, 55%, 60% in 2 days, no. But if you see a pattern set up like this, you can see it's kind of a cup and handle. You can't get below the T-line. That's where the enthusiasm comes back into these stocks. Notice that you were in the overbought condition when they started breaking out to the upside. S.NQ. Stay short until you see a buy signal, and that occurred right here. You should have closed out or gone short. There's your doji sandwich. They can't get up above the T-line. Got to anticipate their next target is down here to the 50. And Facebook, getting toppy up here. If it opens lower tomorrow, position. You can always buy back on the next buy signal. If this is a J-hook pattern setup, it needs to open positive and move in the direction how they open it after a doji. If it opens positive, you put your sell stop at today's low. If it comes back down through there, now you've got a bearish engulfing signal setup potential. Let's see. HIMX gap down today, right onto the T-line, makes this very simple. It has to open positive to stay in it tomorrow. And Yelp, kind of the same scenario there. You're starting to see some toppy signals, but you're still above the T-line, closed right on the T-line today. If it traded lower tomorrow, I'd close it immediately. Worst case scenario is they take it down and they bring it back up through the T-line. You can always buy it knowing that it's heading back up again. RSOL, J-hook pattern setup. This one you definitely want to be a buyer on positive open tomorrow. I don't know whether Fannie Mae comes up here anymore. Let me see. S.FNA. No, I guess they can't grab it anymore. S.FSS. This one also is getting a little bit toppy up here. Notice that there's a resistance level, unless this was a buyout at that level. Make this bigger. If I owned it, it better open positive tomorrow and trade positive. If I was looking to buy it, I'd probably just put another buy stop right up here, because if it comes up through there, we definitely have wave 1, wave 2, wave 3, and wave 3, there's a good possibility if it comes up there. It was telling you they couldn't close it below the T-line, so that's the piece of information that you need to go with right now, is that they're not closing this one yet below the T-line. For some reason, this one's not coming up. Uh-oh. Dang, Jiminy Christmas. Let's see what's happened here. Okay, we're back. Okay, STSI. Flat. Another one that I wouldn't be owning in here. I'd rather put a buy stop knowing that some strong buying finally came in. And VVTV. This one you can be buying, provided the volume is decent. If it opens positive tomorrow, you can see it setting up. And soda. Soda, you're back below the T-line. If this one opens lower tomorrow, you can short it. They're going to be taking it right down to the 50. SGEN. Another one that you can be shorting, especially if it comes down through this level. That would be a wave 1, wave 2. Now you have that shooting star, doji, gap down. This one you want to be shorting on weakness. Fran. Fran, stay short. Or go short if it opens weaker. Notice they could not get it back up above the T-line. You've had a bunch of indecisive trading. Now you have a left-right combo bearish. They're telling you they're probably still taking it down. If you short it, very simply. Just use the T-line as your stop. As you can see, it's an obvious, all of those shorts. Yes, I'm sorry. I didn't read far enough. MU, stay long. There's the slow curve. Now, that one, I say stay long. That did what they call a meeting line today. Closed it here and then opened higher and closed back here. If this opens lower tomorrow, close it out. ISRG, little Morningstar type signal, which is usually kind of a scoop indicator. Very simple. If they open this positive, you want to be trading it positive. First gap to fill right here. If they get through that level, they're heading for the 200. AKS, this one you can be buying. There's your double doji pattern right there. Consolidated, but as they consolidated, you can see they weren't selling it off. And then they opened it positive and took it up. There's more upside to this one. And Worthington, there's your methods rising. 3 indecisive trading days back. Then right off the T-line, they opened it positive and took it up. This is more upside, which means your fry pan bottom is still in progress. Let's see, an RLG. Bullish engulfing. This one you can buy on positive trading. Would be breaking this downtrending channel. Oops, let me scroll some more. BBRY. Another doji gap up, but a doji. But it makes it very simple. If they open this positive tomorrow, you want to be buying, because that tells you the T-line's not acting as resistance. We did Apple, we did Facebook, we did FTNT, we did BBRY, GGAL. This one has to open positive tomorrow, which it likely will, with your J-hook pattern setup. That's a good-looking chart. GDX. Whoops. S.GDX. Morningstar type setup, but like anything else, it has to get back up through the T-line. If this opens lower, if you're short, which would be a good idea at this point, you stay short. But if it opens and trades positive, you could be looking to buy it. See, we did HIMX, we did VTUS, Occidental. Stay long. There's a Steady Eddy. Steady Eddy is very easy to observe, but even with your sell signals, when they can't close it back below the T-line, you just stay long. And Ford. Ford is starting to roll over a little bit. If you're short-term trading, get out of it. Long-term, you stay long. UPS. This one, if it opens lower tomorrow, you start shorting immediately. Notice your flutter kicker signal. That told you there was going to be more downside. And Las Vegas Sands. Another one that if it opens lower tomorrow, you can start shorting immediately because you're going to have the little flutter kicker to the downside. Whoops, what happened to my mouse? I lost the mouse. AMAP. AMAP had a good chart set up, but it never got going. Oh, it's still there. I'm sorry. I thought it had closed down here. This is still that slow curve. This makes this one very simple. If it opens positive tomorrow, buy immediately because you'll have a trend kicker, you'll have your slow curve breakout, and if it trades higher tomorrow, breaking out through this area, again, that's where you can have those big, huge price moves. AVNR, another slow curve setup. Your left-right combo closed you above the T-line. You can be buying this on positive trading after the doji tomorrow. Deer. Deer, I wouldn't be long or short. Number one, if it does pop all the way up to here, you've made 4.5% on a $82 stock. I'd be someplace else. And TLT, the 20-year bonds heading up. You can see the little cup and handle. Bond prices heading higher means interest rates heading lower. Let's see, we did DDD, CRM. CRM, another one that if it opens lower tomorrow, you can start shorting it because it pretty much tells you up here that you started getting some selling. And if they open it lower tomorrow after today's little doji type day, tells you they're not holding at the T-line anymore. CLIR. Doji, again, if it opens positive tomorrow, you can be buying this one. If it opens lower and closes below the T-line, you want to be back out of it. MOS, buy on positive trading, sell if it opens lower tomorrow. GALT. There's that slow curve. This one you can still be buying if on a positive open. This one is breaking out through the J-hook pattern area. I wouldn't be afraid to be buying this still tomorrow on positive trading. And PSDV, another one that if it opens positive, the J-hook pattern, notice your big fry pan bottom breakout, then J-hook pattern. If it opens positive, it tells you the profit taking is still over. You can be buying. Let's see, we did NQ, we did Las Vegas Sands, TMV. Oh, the 20-year, the bearish. So the bond prices go up, you can still be shorting this one. VXX. Whoops. S.VXX. Look at the fry pan bottom. This is the VIX. You can be buying this if the market opens weaker tomorrow. We did ACAD, TRX, Doji followed by close above 3T reversal. Yes, but we haven't gotten above the 3T yet. Oh, the 3T, no. Remember, the 3T is more if it's moved dramatically away from the T-line. As you can see, it hasn't moved dramatically away from the T-line. It's been pretty steady. So at this point, you still use the T-line. Remember, the T-line is your bellwether. The 3T is just when you move to a good distance away from the T-line that you want to use that. EW, another one that if it opens lower tomorrow, you close it out immediately. That'd be that bearish Harami confirmation. Let's see, Dang backed off a little bit. Probably also in the same situation that it's in the trend channel. If it opens lower, you probably want to close it out because it's probably coming back to the T-line. FB, same scenario. You're getting flat here. If they open it lower, it can tell you they're staying flat and they're taking it back down. ACI. Oh. I think it just did this. See, POT. Oh, for crying out loud. All right. Smoke them if you got them. There we go. Ha! Potash, if it opens lower, you close it out. It's still stuck in this sideways pattern. It needs to open higher and trade higher to stay in it. ACI needs to get back up through the T-line. S.CLF. This one you stay short. You can't seem to get back up above the T line. You can go short if it opens weaker tomorrow. Let's see. That was okay. So if we do PDS, this one you can be buying with the idea that you're in a wave. Let me make this smaller. I would assume. Yes, there's your fry pan bottom. There's your wave one. Now you're in a sideways channel. You can buy, if you own this, I would hold on to it. It needs to break out through this level. If you see some selling at this level, close it out because you're still in the sideways area. Ruckus. Ruckus, very simple. If they open this lower, they've failed up here twice or at the double top. Close out the position. And SLW, stay short, but this is got silver. Still stay short until you see a buy signal and a close above the T line. INVN. This one broke out into new territory. Look for the 45 degree that was going to take it up in the same magnitude as this. Note what it did. It had a trend channel, came out of the trend channel, and has come back into the trend channel, and will probably continue into the trend channel. Data. This one you can short on weakness tomorrow. SQNS. Another one that you notice the tweezer top. I pretty much told you that was where the resistance was. If you own this, hasn't closed below the T line. It closed right on the T line. It has to open positive to stay with it. SanDisk. Another one that has to open positive to stay with it. If it opens lower, it's coming back to test the T line. Then you see what it's doing. I get one suit, get 5 free. Okay, that's at Men's Warehouse. First Solar is still coming out of this fry pan bottom. You just stay with it as long as. Now, some cases you close them out, knowing they're coming back to the T line. In this case, you stay with it as long as it stays above the T line. Give it a little bit more latitude because you are in a fry pan bottom. And INSY. Yes, and you can see what it did also is bullish engulfing signal, close above the T line, broke out through this level. Wave 1, you're in wave 3, and you probably have some more upside. But you're getting up to the overbought area. Each day, I would put a sell stop at the previous day's open. Or if this opens higher tomorrow and starts trading up, you put a sell stop at that open. What makes for a left-right combo? A left-right combo is a doji followed by a bullish engulfing signal. I don't see one on here. But they're very strong reversal signals. Do we sell if it opens lower on AMAP? No, I would still use the T-line as your stop because this is more of a slow curve breakout. As long as it stays above the T-line, you can stay with it. Can we be bearish or bullish? At this point, it'll be pretty much tell you what, it can be bearish or bullish, I say. Yeah, you can have a bullish left-right combo or a bearish left-right combo. Left-right combo. I'm trying to think of one recently, and I can't. I look at them every day, and then when I have to think about one, I can't think of it. Winnebago, you stay long as this stays above the T-line, and more than likely, if it keeps sliding toward the T-line, they're going to pop it up again. G-Gal, left-right, all right. That's kind of a left-right combo. There's your kind of spinning top, bullish engulfing. Let's see if I can find. There's a left-right combo right here. A doji followed by a bullish engulfing usually starts a very strong uptrend. Thank you, Stephen. Let's see. Where should you put your stop at Winnebago? I wouldn't want to see it close back below the T-line. I probably wouldn't want to see it trade below the T-line at this point. If it does, that means your stochastics will be rolling over. So that is right there at, probably right around the $26 level. Okay, yes. Okay, last one, price line. Price line, bearish Harami, bearish engulfing. If it opens lower, close out the position. Does that mean your uptrend is over? Definitely not, but it's probably doing some profit taking. All right, that's about all I got for tonight. I kept you way overtime. We kept 40 minutes overtime. All right, we'll see you all in the chat rooms tomorrow.